Best one that comes to mind is what Ross Speedy did with Lumina in early 2000, where they acquired copper resources in the ground. And then as the market turned and copper prices got better, they were able to realize significant return for their shareholders. And we embarked on a similar journey with gold mining.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And as we continue on in this historic gold rally, prices go up, prices go down, but we see the trend that's continuing. We see what is happening with central banks around the globe. We see headlines of more corona, and a lot of people are starting to see what's coming, more stimulus dollars. So fascinating gold environment. And today I'm quite excited to be joined by Amir Adnani of GoldMining, who's going to tell us a bit more about the company, and certainly for people that see that there's a lot to suggest a continuation of the gold rally, or even just gold at the current prices. Amir, it's great to have you here, and it's quite an environment, isn't it?
Hey, Chris. Yeah, it's great to connect with you. It's an environment like no one could have predicted. There's not a single person, not a single soul could have predicted this kind of thing as it has unfolded, and it is still unfolding. And it's concerning. It's concerning what's going on out there with the economy, with these balance sheets that me, you, and any other taxpayer is going to be responsible for. Politicians are there, and central banks are there, basically giving away any kind of economic sanity just for the sake of getting through what we're dealing with. And there's a price to pay. I get it, and there's a major health issue and concern that needs to be dealt with, but there's probably even a greater financial concern beyond all of this for a long time to come. It's very difficult to think about it.
Well, I guess how we think about it, maybe that's the challenge. And perhaps the world is not being run the way I would choose if I was the central banker or president. But I think what's nice is that we can choose how we respond. And in particular, that's why it's nice to hear about gold mining, which is essentially a response where investors, where they're looking at these alternatives, massive stock bubbles, bond bubbles, and we still have a lot of money going into gold, and there are companies that go and dig it out. So you've created an interesting profile, and perhaps you could walk people through so they get a good picture and know what the company's doing and where you guys are at.
Gold mining is a mineral bank, and what that means really has its roots in companies and entrepreneurs in the past that have done the same mineral bank concept. Best one that comes to mind is what Ross Speedy did with Lumina in early 2000, where they acquired copper resources in the ground. And then as the market turned and copper prices got better, they were able to realize significant return for their shareholders. And we embarked on a similar journey with gold mining starting in 2012, which was the very beginning of the bear market for gold, the last bear market cycle that we were just coming out of. And we were very aggressive. And when I say we, I'm not just talking about the team and the board that we have at Gold Mining, which is made up of mineral exploration and mining veterans, but also some really key financial backers. You look at, to be a contrarian, it's easy to say it, but to really be a contrarian, it really takes certain ingredients and criteria. You have to have the right backers. You got to have patience. You have to have stamina, and you got to really just stick to your knitting. And so you look at, the combination of things that we had. We started to make acquisitions starting in 2012, and we're aggressively buying gold projects and resource stage gold projects. That's gold in the ground for close to, up until 3 months ago. And we were doing, we were buying these gold projects, Chris, when gold was closer to $1,000 an ounce. Today it's closer to $2,000 an ounce. So we were buying them when you can buy things for 10 cents on the dollar. And you could not replicate what we did during a bear market today when we have a bull market in gold. And so what that does is that it positions gold mining in a very unique league of its own. Today, we have over 25 million ounces of gold resources. Now, I'm combining all categories of resources, but if I break it down, about 45% of our total resources are measured and indicated, and the balance would be in inferred. That's gold only. If you add in some of the copper and silver co-product that we have, the number would be well over 30 million ounces gold equivalent. For audience that might be new to these numbers, that's a very large portfolio. That's typically what you would see in the control of bigger producers. Small pre-production gold companies might have anywhere between 1 to 5 million ounces of gold. So where we stand certainly stands out from a size point of view, number one. And number two, it really has to do with the fact that we acquired these assets for stock for 10 cents on the dollar because the market was low, and we don't have any debt. We didn't use any debt to acquire these projects, which were all previously public companies. In fact, if you look at the peak market cap of all the companies that we acquired, it was close to $850 million. And our total acquisition cost was $81 million, hence my comments about 10 cents on the dollar. Yep. And furthermore, about $330 million of cash went into drilling and development of the portfolio that we own. So when I look at the fact that we spent $81 million acquiring our portfolio, which includes 14 projects in 5 countries in the Americas, so it's very diversified. We're in the US, Canada, Colombia, Peru, and Brazil. When I look at the $81 million we spent acquiring projects that had $330 million of cash expenditures and combined peak market cap as individual companies of $850 million, I think we timed our acquisitions very well because we bought for less than discovery costs and for a fraction of basically what valuations were the last time gold was at 1900. And it's an attractive setup for us today, Chris, because our market cap today in US dollars is about 220 million US. So we're still far from kind of where we could be and should be. We're trading still at less than $10 a resource, gold resource in the ground. That's very compelling. But mind you, what we paid to acquire these gold resources was less than $4 an ounce. So we're doing well in terms of getting a value uplift from what we paid for the gold resource in the ground. But trading at less than $10 a gold resource in the ground today, when you look at historic M&A multiples or where developers are trading at, which is anywhere between $30 to $100 a resource in the ground, presents a lot of it presents a very strong value argument for where gold mining is and what it's been up to. And look, gold is hard right now, so there's a lot of new interest on the commodity. A lot of companies and entrepreneurs want to get in this sector. But like I said, we've been planning and building this company for close to a decade when it was so out of favor. And if we didn't have those early backers, right, names like Rick Rule of Sprott Global and Doug Casey and Marin Katusa with the KCR Fund and one of the oldest and largest investment firms in South America, Brazil Invest, these were the early financial backers of gold mining, and still to this day, that really allowed us to be contrarian, along with management team that basically just executed the strategy.
Yeah, Amir, I appreciate you mentioning that because obviously a lot of the stocks are up in the last couple months, and there's some degree that's historically how the metals markets go, but you don't just flip the switch. And really, you know, especially those times when the market wasn't as easy, 2012, 13, that's when you can find the deals. It's funny you mentioned Rick Rule because if you remember, that's where we met in person for the first time at, I think it was 2 years ago at the Sprott conference.
Right.
And I had heard a lot of other newsletter writers and investors talk about you, and especially since leaving the trading floor, one of the things I look for, even more so than the numbers, it's like, let me find the guy that's running and making the decisions. And if you understand and agree with that person's philosophy, fortunately, I will pull up a chart here. It looks like over that time period, here we're going back to 2018. It seems like the market has been pleased with a lot of the things you're doing. Here's the 1-year chart. And obviously, it's nice we see for the people that, and that's the thing with these mining projects. If you find businesses you actually like and you just sit there and you get to be a part owner when the market corrects, here you have your stock is up over 8% today. And any comments on just the progress you've made? And it's nice to see you being rewarded.
Well, I mean, first of all, like I said, it takes like-minded people, and any shareholder and backer that we had over this 10-year journey. Okay, I mean, again, like to your point, it takes a long time to build a foundation that really underpins meaningful growth. Every shareholder that has been there on this journey was a like-minded person, someone like myself, where you really like to be countercyclical, you like a good deal, you know that you can create value based on what you pay for an asset, not just what you do with an asset. This is so important, right? This whole notion of price is what you pay, but value is what you receive. I think there was more value to receive when we were able to do these deals. And to your point, we did all of it because we felt we would have strong correlation and leverage to the gold price. And so you would expect our shares to do well and should, in fact, outperform the gold price in a rising gold environment. That's exactly what we've done going back at, whether you want to track the beginning of this bull market in gold as the beginning of next year or as of a year ago or 2 years ago, we've shown that outperformance. And so, frankly, it's kind of rewarding to just know that what we thought we were building this vehicle for is doing what it should be doing. And it's to provide us as the holders and owners of this vehicle that exposure to gold and that leverage to gold that we wanted and we're looking for. And look, the other thing that I thought we would have the ability to do in a rising gold market environment was to get creative and to really just take even more value out of this portfolio that we've created. And that brings us to the announcement that we had recently, Chris, with the formation of Gold Royalty Corp. So now you got two companies basically inside one. And with Gold Royalty Corp, again, this was possible because, again, when you acquire so many projects like we have 14 projects in 5 countries. That's a very big portfolio. You can look at the market today and realize, as we did, that, hey, look over here, these precious metal royalty and streaming companies. Yeah. Or first of all, there's many of them now. There's like every week there's a new one that's starting to trade. Number one. And number two, they trade at far better market multiples than the developers and producers do. And investors like the fact that these are kind of less risky businesses because with royalties, you don't get into developing and dealing with all the headaches of mining. And if you just owned one asset, you couldn't create a royalty company around that. If you owned a few assets, you couldn't do it. You need critical mass and you need diversification. And if you had even a lot of money, you couldn't do it because you couldn't compete right now with Franco-Nevada and Wheaton Precious that have incredibly large balance sheets and market caps. But we were able, due to the fact that we have 14 projects, very diversified, we were able to create a new royalty without any way creating a burden on project development for the future, especially because many of our projects didn't have any pre-existing royalties. Yep. And this was the ultimate way to unlock value for GoldMining shareholders. Because if you're a GoldMining shareholder now, you own the assets 100%, but GoldMining also owns 100% of newly created royalties on our entire portfolio. That gives you even a more long-term option and leverage to the future potential of these projects. We own it 100%, and our plan is to spin this out or IPO Gold Royalty separately sometime in the near future. But to really validate this strategy, we've announced now recently the appointment of David Garofalo, the former CEO of Goldcorp, as the CEO and chairman of Gold Royalty. This really elevates and shows as a validation of our strategy. David, when he merged Goldcorp with Newmont last year to create basically what is now the world's leading gold producer in Newmont, hadn't taken on a CEO role of any other gold company up until now. And this is the first time he's taken on a new mandate as CEO of a gold company in the sector. And it happens to be Gold Royalty. happens to be 100% owned by GoldMining. And he's also joined the advisory board of GoldMining. And that kind of addition to our team at a time where we're in a bull market, you're going to say to me, Amir, you guys were great to get out there and buy these things when they were cheap, but what are you going to do with them now? And now we're showing that we're attracting the best, the best human capital and talent you can attract. We're attracting. We're pursuing a dual strategy with gold royalty and the development of our portfolio, both through organic growth and perhaps M&A. Because Chris, the sector is starved for resources right now.
Yep.
Resources in the ground are at 50% of what they were a decade ago. And that's because, for good reasons, the major producers cut spending. They wanted to focus on returning capital to shareholders. They were very focused, but that comes at an expense. And the expense was no exploration and development. So as a result, you have a situation where I think our value proposition today as GoldMining is unmatched. Like, find me another company in this sector that can say to you, it's got 25 million ounces of gold in the ground, trading at less than $10 a resource in the ground, and 100% ownership of a royalty company that owns a royalty on all those assets, two distinct vehicles owned by one company, and attracting the best talent and management team with major gold producing track record, all to drive it forward. And we've got $1,900 gold. And like you said, sometimes it's up, sometimes it's down, but we're truly in a bull market today.
Yeah, I love what you mentioned there. It reminds me of something I asked Brent Cook, who I know you know, newsletter writer. I asked him about a year ago about how things change with the different gold price. And it was interesting. He said, even more important than that is who you have running the thing, because yeah, some things can get bailed out, but if you have people who know what they're doing, especially like people, that's what's great about mining, where if you actually have relationships and work well with others, there are deals out there that a lot of people just don't know about. So you have that part in place. And just one last one for you. Can you, in some way, put in context for people? I think people get it that there's leverage to the gold price with projects like GoldMining, but I don't think maybe they get the extent. Can you explain how things look even at 1,900 gold, 2,000 gold, let alone if we get some of the numbers that, it's funny you mentioned Doug Casey. He went on Phil Donahue's show back in 1980 and talked about how he thought $3,300 gold was coming then. So if you could put that in context, just how that adds to the bottom line of a company like GoldMining.
Well, again, nowadays, you don't need Doug Casey to pound the table on the Phil Donahue show about $3,000 gold when you got Bank of America doing it for you, calling for $3,000 gold. So that shows you the almost structural shift that we've had in the investment thesis for gold, where it's no longer limited to those of us that you can call gold bugs, and it's almost now become a must-have in every portfolio. So that's interesting to note. But look, the second thing is really just about the fact that in our business, being the mining business, resources and what is economic and what isn't economic is really very much a function of the commodity price. And again, the reason why someone listening to this might say, well, Amir, why were you able to buy the projects that you have for 10 cents on the dollar? Was something wrong with the projects? The answer is no. The answer is at $1,100 gold, many projects in the world, including the ones that we bought, were sub-economic. And so if something is not economic, it's not worth as much. It doesn't attract investment attention. Plus, a lot of investors were focused perhaps on cryptocurrencies or cannabis space, all these other things that people were focused on when gold was in a bear market. Today, and I'm not even talking about $1,900 gold, at $1,500 gold, the projects that we were acquiring that were sub-economic at $1,100, at $1,400, $1,500, and there's 14 projects, so they're all different. They're not all the same. But at different gold prices, much lower than today's gold price, but higher than $1,100 or $1,000, these projects become economic. And they become economic because when you look at the development path forward and the kind of production numbers it can generate and cash flow it can generate, it starts to reflect a project that can work. And that's the same really for the whole sector. And also it's the reason why I think you're going to see more M&A in the sector, because as the producers keep making more and more cash flow and their assets start to trade at 2 times or 2.5 times net asset valuation, which is historic highs, they need to show growth. They need to show that they're growth businesses that can increase their production numbers and increase their cash flows, not just by the sheer factor of the gold price going up, because that's already priced in, but they got to show growth. Growth in the mining business is resource in the ground. That's where growth starts. And from there, you pull the stuff out and deposits get depleted, and that's how our business works. So if you look at the historic M&A multiples, what companies have paid when they go out there to acquire resources in the ground, that number ends up being somewhere close to $80 to $100 an ounce. In a bull market, it can get as high as $150 an ounce. And you look at the fact that today we're trading at less than $10 an ounce. And so we're not even talking about bottom line, because again, we're talking about what we have today, because we're not mining, we're not operating a mine. We have projects that are pre-production that have had $330 million of cash expenditures in them to drill and develop and define an independent qualified mineral resource under 43-101 guidelines. And we have to say to ourselves, what is that worth? What are gold resources going for? And what could they go for in a bull market environment where we start to head towards $2,000 and $2,500 and $3,000? And that number is, in my mind, somewhere north of $100 per gold resource in the ground. And that's a very significant uplift when you consider where we're trading at today for the resource base that we have at less than $10 an ounce for the gold resources that we control.
Well, Amir, it's impressive what you guys have done, and perhaps you would just be kind enough to let folks know if they have questions, want to get more information. And I'll say firsthand, it's been a pleasure getting to meet Canepa and Bruce Nicholson and the other folks that you have there, and has been helpful. Of course, Scott Melby, of course. You do have really a great team of people, and so for folks that have questions, would like to find out more, how can they do that?
We do have a great team, and the team has been with our company from the get-go and has a great long-standing history with the assets. So they're really informed and knowledgeable to talk to about the projects and the company. You mentioned Canepa, you mentioned Bruce and Scott. And so the best way to do this is just go to www.goldmining.com. GoldMining.com is our corporate website. And all the information is there, and you're showing the website right there. And you can go to the contact page and get in touch with our team. We're listed on the Toronto Stock Exchange under the ticker symbol GOLD, G-O-L-D. Easy to remember that one. And in the US, on the OTCQX market, and our ticker symbol there is GLDLF.
Well, Amir, I sure appreciate that. It really has been a pleasure getting to know you. Thanks for sharing some info about gold mining. I think this will be helpful for people to be able to see, especially over the years. I think you're going to be proven right on especially a lot of things with the gold forecast, and we will look forward to following your success along the way.
Thank you, Chris. I really appreciate that, and look forward to reconnecting with you for some updates soon.
Yeah, and hopefully in person one day again soon, my friend.
Look forward to that.